Mark, I mean, if you look at the retail side of things, from your standpoint, they are certainly, as Jill points out, a big part of the story behind the rise and maybe even the fall of Bitcoin so far. From an institutional manager standpoint, do you feel as though this is someplace that you still want to be, given what we've seen from a macro big picture narrative with inflation, with kind of like the Fed and its tightening regime, interest rates and everything else? Is this still someplace that retail should want to be?
Yeah, absolutely, Dominic. This is an asset that every investor must have in their portfolio. Bitcoin is the best performing asset over 2 years, over 3 years, over 5 years, over 10 years, and over the life of its existence, all 14 years. And you have to have some exposure in the portfolio. It's extremely volatile. Well, why is it so volatile? Volatility isn't your enemy. It is just an indication of uncertainty and disagreement over future prospects. And I think there are a lot of people who are maybe less educated about what Bitcoin is, what blockchain technology really is. And so when they see the price volatility, they run away, as Jill mentioned. And I think what we're seeing now is we were in crypto winter. I believe that ended the middle of June. We're in crypto spring. That'll be a volatile period with an upward bias. And then we'll go back to another crypto summer when the retail traders will flood in and buy at higher prices. One thing about this asset is it is the best performing asset over all of those periods. Had you just put 1% in a portfolio, you would have outperformed the 60-40 over the last 5 years by 250 basis points. But people are afraid of volatility. So we actually launched an ETF called CRYP, where we use cash to mitigate downside volatility in the drawdowns and then get fully invested in the spring and summer periods like we're in